India's economic survey for 2024-25 has projected a GDP growth rate of 6.3 to 6.8% for the fiscal year 2025-26. This optimistic yet cautious forecast was presented by Finance Minister Nirmala Sitharaman, emphasizing India's economic resilience despite ongoing global uncertainties. India's economic expansion is expected to be driven by several key factors. Strong domestic fundamentals continue to propel growth, with key industries such as manufacturing, services, and technology thriving amid rising consumer demand. A steady decline in unemployment signals an improving labor market, creating more opportunities and boosting overall economic confidence. Inflation levels have remained under control, ensuring that purchasing power is not significantly eroded, which in turn supports consumer spending. Additionally, India's external account position remains healthy, backed by a stable balance of payments and robust foreign exchange reserves, reinforcing economic stability. The government's commitment to fiscal prudence is evident through measured fiscal consolidation efforts aimed at maintaining economic discipline without compromising growth. Meanwhile, private consumption continues to be a strong pillar, with steady spending patterns providing a solid foundation for sustained economic momentum. While India's economic outlook remains optimistic, several domestic and global challenges need to be carefully managed to sustain growth momentum. On the global front, rising geopolitical tensions present a risk to trade and investment flows, potentially disrupting supply chains and slowing down export growth. Uncertainties in international trade, driven by shifting economic policies and evolving global alliances, could impact key industries reliant on external markets. To navigate these challenges, strategic policy adjustments will be essential, ensuring India remains resilient amid changing global dynamics. Domestically, the successful implementation of structural reforms at the grassroots level will be crucial in maintaining economic progress. Policies aimed at enhancing ease of doing business, streamlining regulations, and improving governance must be executed effectively to drive sustainable growth. Further deregulation efforts, particularly in sectors with high growth potential, could strengthen business competitiveness, attracting both domestic and foreign investments. Additionally, strengthening India's position in global markets requires consistent policy support, including investments in infrastructure, technology, and human capital. A forward-thinking approach, coupled with adaptive policy measures, will be key to mitigating risks and sustaining economic resilience in the years ahead. Inflation trends remain a key focus in the economic outlook. The survey anticipates that food inflation will moderate in the final quarter of FY25, supported by a seasonal decline in vegetable prices. While rising global commodity costs may introduce some upward pressure, their overall impact on inflation is expected to be contained thanks to proactive policy measures and supply-side interventions. Looking ahead, India's growth prospects for FY26 appear well-balanced, with the government recognizing both opportunities and challenges. Strategic policy interventions will play a crucial role in sustaining economic momentum, while prudent fiscal management will help maintain stability in an evolving global landscape. A strong focus on domestic resilience through infrastructure development, structural reforms, and investment-friendly policies will be key to meeting the projected growth targets. As uncertainties in global markets persist, India's ability to adapt and navigate these complexities will ultimately shape its economic trajectory in the coming years.